Well, good morning. Welcome into Market Day Report. I am Scott Shelley. I'll be here with you all day today. Marlon's on assignment, doing something important. So I'm in the chair. Hopefully we can clear a lot of things up for you. But as I'm sure you're well aware, and Janet has let everybody know before I came on, that we're in a recession, ladies and gentlemen. It's official. And that's nothing that you should gloat about. But the numbers came out clear and present. And we had a GDP of minus 0.9%. When we were expecting something maybe even positive, but the Atlanta Fed had expected something more closer to that number, around minus 1.2. So it's here, and what I want everybody to know is that we're raising interest rates while we're in a recession, which is absolute kooky talk, all right? I'm just telling you that right now. That's a problem. Why don't we get to what these markets have done overnight? That'll also give you some little bit of clear-headedness, so we'll see what's happened to corn. Look at this. It was up 12.25 cents. That's September. 6.12.5 was last, and we've got December at 6.15 3/4, so well above that $6 mark. Soybeans, I believe they also had a decent day. Well, up 3 cents in August, 9.25 in September to 14.33 3/4. And Novi New Crop is 14.19, up 9. All right, there you go. How about wheat in Chicago? What did that do for us overnight? 17.75 cents higher in SEP. 8.08 even was last, and Dees was up 17.75 as well. 8.26 1/4. Let's go over to hard red wheat in Kansas City. What's the HRW doing? Well, that SEP's up 16 cents to 8.77 3/4. Dees is up 17 cents to 8.86 even. All right, let's do spring wheat in Minneapolis. How about that? Let's visit those guys. They had a little bit of a negative day because of some higher yields, but look, bouncing back, 15 cents higher in SEP, 9.25 even as last. Dees is up 17 cents to 9.39. All right. So far, so good. I can handle this, right? There's not a lot of bad news to deliver here. We've got Dees cotton up 110 points to 96.17. All right, Brian, you've seen the numbers. The floor is yours. What say you?
Well, good morning, Scott. Yeah, these export numbers that came out this morning were really uneventful for the markets. I think we'll pretty much ignore them.
That's
We
why I
are
didn't talk about them.
seeing, they're not much to talk about. There was a net reduction for old crop soybeans. That was the third out of the last 4 weeks. We may change the USDA's balance sheets slightly because of that. New
Right.
crop soybean sales were strong. The corn numbers were just okay. Wheat was just okay. So really, there isn't much to even discuss in here. We're going into delivery period though tonight, and that seems to have a lot of impact on this market from the standpoint that soybean meal, which is in real tight supply, has been rocketing higher. We did see some profit taking on that overnight. Maybe they got a little bit of cash business done, and that pulled that market back and seemingly pulled soybeans off its highs. But as we go into delivery period, cash markets remain strong. I think it tells us that maybe there isn't quite as much supply out there as what the USDA has been telling us for these old crop balance sheets. Just certainly when you have basis levels $2.50 over the board in Missouri, $1.50 over in Iowa, our number one corn producing state. There's just not a lot of crop out there to be had. So I'm very confident, Scott, that we've put our summer lows in for these grain markets. Corn, soybeans, and now wheat is starting to do the same thing. Dips that we have in this market, I think, will be bought. And with the weather forecast next week, we are likely to see these markets try and continue to push higher, putting in more premium.
Yeah, it looks like we're taking definitely something off of the 177 and 51.5 numbers, respectively. More for corn right now. We still don't know quite enough about beans, but it definitely looks negative. So it just bodes for a tighter time here as we go forward. I totally agree with you, and I think you're right. The lows probably are in. All right, we're going to go away. We're going to pay some bills. We're going to come back and talk with Brian Hoops with Midwest Marketing after these messages. All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy, and that's a great segue. First, right off the bat, I'll use that. And then taking a look at what these live cattle markets did overnight. Why don't we take a look at live cattle? Well, let's say that we're going to say that's mixed. Somebody's going to try to tell me there's some bear spreading going on there, but that's just not enough for me. But let's say August was down 7 cents to 136.80. Let's go out, and then if you got to go out to December, that's the first positive we have on the board. That's up 12 cents to 148.17. But really, we didn't really have 60, 70 cent overnight ranges, so it's not really that big of a deal. 70 cents, so small range, small change means not a lot's going on. So let's not read too much into that right now, but we will open up here soon, so we'll get a better feel for things. Feeder cattle acting strong, even though we had corn higher here. So August is up $1.67 to 179.10. Go out to October, that's up $1.25 to 184.47 overnight. Or not overnight. That's where we closed. Sorry. These all closed yesterday. These are reminding us of what we had. There we go. Let's see if we can get lean hogs up again. Lean hogs. What does that look like? There we go. August. Closed last night or overnight or yesterday afternoon. I'll get my pedantic semantics right. $1.62 higher, 118.60. And we had October up 280 to 96.45 yesterday. So with all those, we've got some decent, let's bring back in Brian. Brian, we've got, looks like some strength to me in the feeders, the way they acted a little bit yesterday. Live cattle, very, very quiet. There was hardly any range. And then lean hogs, what do you think?
Yeah, you look at the feeder cattle market, a lot of strength despite corn being higher. We'll see if we can follow through on that. But yesterday we opened lower and we saw some bargain hunting that gave us that bounce in feeders. But if you look at the live cattle board, this is a hedger's market setup right now. We expect the supplies to tighten up significantly as we go into this third quarter, fourth quarter, and then next year. And the futures are already holding the $20 premium out to April over the current cash market. So this is a market, especially with the recession numbers that we saw this morning, that really begs the producer to lock in their expenses, they lock in their cattle, and get something hedged on the board in here. Supplies tighten up, maybe the markets move higher, maybe the cash moves higher, but April futures have dialed in a $20 move already. It's kind of the opposite in the hog market, where you have all this cash strength in the front month, and we're seeing August move higher, but October holding such a huge discount to where August is. That market really needs to catch up and kind of narrow the gap between the cash markets and where these futures are at. They seem to be just way too undervalued, in my opinion, especially given where we've been trading the cash fundamentals almost all summer.
Right, and when you talk about the premium futures at a $20 premium, say, to cash, that's a great opportunity for, like you said, for the ranchers to lock in some stuff, but you don't have to lock it in forever, right? You can actually lock it in and then own a call in case it really starts to get away from you, because I think that's why they get afraid to do anything, right?
Right. Yeah. There's two really good ways, I think, to play this market. You could hedge it and then buy calls over the top to give yourself that upside potential.
Right.
Or you can just buy maybe some put options and sell a call, give yourself a window or a fence of maybe $10, $12 to the upside yet. But
Awesome.
you can cap your income. So there's different ways to play this, but certainly it's a great opportunity, I think, to be doing something both in feeders and in fat cattle.
I love how you called it a fence, right? Because that strategy is a fence. It's a combo. It's a risk reversal. Many different ways to call it, but I haven't heard fence in a long time. That's awesome. All right, appreciate it. I think that's more of a stock term, by the way, but I don't know. Thank you for that. That's great stuff. Brian Hoops from Midwest Marketing. Thanks for being on the show early this morning. Really appreciate the content. Great stuff. We'll bring it back to Nashville so I can throw this over to Janet.